too much, whatever neck of the wood you happen to be in. Again, welcome. My name is David Etienne of Etienne Business Solutions, and today I just want to spend a couple of minutes bringing you a bit of information. But just before, I'll just remind you to subscribe to our YouTube channel, Etienne's Place. That's our YouTube channel where you will find this and several other recordings, videos that we have done on several topics that you should find, quite informative. Well, without further ado, today I want us to look briefly at this whole concept of financial management. Now, I'm going to focus more on financial management, not so much personal financial management, but more business financial management. And I will even fine tune it to look at small business financial management. And you may be wondering, so okay, what is the difference between small business financial management and large business financial management? No difference, no difference. I only want to emphasize that financial management happened to be an ingrained, institutionalized practice in larger corporations. What we find though is that our small business operators tend to overlook this aspect of it, whether this of inability to conduct, whether it is because they don't see the importance of it. Okay, so this afternoon I just want to spend some time looking at that. And as usual, I speak on these topics from time to time as I am prompted by the questions and the concerns that I get coming from my small business clients. Now, financial management. Clients quite often are concerned that, they are often of the view that their service providers, and when I say service providers, let us say the accountant or the bookkeeper, the professional who is handling their business affairs. Quite often, small business owners will express a concern or a perceived concern that maybe their particular needs or their particular challenges, business challenges, are not properly identified and are not being properly addressed. Because it's common to notice or to hear business owners speak in a manner that would communicate that their understanding is that their problem, their business challenges and problems are so unique that the established script or the established way of conducting financial management would not fit into their needs. So let me just clarify on this. Accounting, taxation, financial management, you name it. There is an established template. So to backtrack a bit, financial management, business financial management, whatever, is not a new discipline. So it means therefore that a lot of principles, structures, systems, platforms, whatever you call it, has been established over time. And those policies and ways of doing business, of managing businesses from a financial point of view, are properly researched, documented, and are taught widely. Why am I going there? What I want to impress on you is that there is an already established format or template prepared to aid in the management, in the financial management of businesses. So here's a step-by-step process. As a business person, the first step is to look and see what are your personal financial management challenges. Well, I admit sometimes you're not even aware of what those challenges are, because quite often small business owners may have a sense that something is not right, but I cannot put my finger on it. And so they are depending on the professional to basically do some research, do some investigation, and identify what could be the problem or the cause of the problem, and then take it from there. The process is very structured. There's a template, there are certain procedures, there are certain measuring sticks, there are certain matrices that are used to measure financial performance, and that is used to ensure proper financial management. So the first step is to take a client's business and put it in that mold. Put it in that mold. When I say put it in that mold, apply the proven principles. Apply the proven methodologies that have worked in a general business sense. Now, having done that, it will now be easy to identify what specific things about this client that do not properly or snugly fit into the model. So you see where I'm going with this? You take the client's structure, whether it be the financial system, the accounting structure, the tax system, whatever. You put it into this mold, and then you see how you can identify the solutions that will work for the client. To the extent that this client now has certain peculiarities about his or her operation that need specific attention, you will naturally see that the mold, the template, for one reason or the other, is not adequately addressing those specific concerns. So, in taking that approach, you're able to easily identify those things that you would have to say, okay, the normal model does not address these things, and so we need to now pay special attention to these particular things. We may need to tweak something to satisfy those needs, or we may have to consider actually developing something new just to address those things. So I would have clients who come, and yes, they have genuine concerns, and and they share with me, and I say, okay, here's what we're going to be doing. We're going to go steps 1, 2, 3, 4, 5. And these steps 1, 2, 3, 4, and 5 are not steps that are unique to this client. They are tested and proven steps. They are steps that work in terms of proper financial management. When we apply these proven steps to this particular client, as I said earlier on, then if this client has any particular situation or any peculiarities about his or her operation that does not fit, or that does not get an answer from those predetermined methodologies, then we can take a more closer look and say, okay, I can see that this unique aspect or this unique component of your operation really requires for us to design or to identify or to maybe modify one of the proven methods to satisfy that particular need. So by taking that approach, you actually isolate those things that need particular and specific attention. So instead of starting from the point where we're going to, as it were, try to create new systems and new structures for just about everything, It's a waste of time, it is unproductive, but some clients just think that the nature of their challenges, the nature of their needs require that a totally new and radical approach be taken to their situation. It doesn't work that way. It doesn't work that way, because I can guarantee you, easily 90% of a client's financial management concerns can be addressed and can be answered by applying tested and proven financial management procedures, financial management systems. So once we do that, if and as I said before, up to 90% of those concerns can be addressed in that manner. Now, it is possible, admittedly, that the other 10% may be things that are peculiar, particular to the client. Okay? And so we're going to say, okay, now, let us isolate those components representing that 10%, and let us sit and, as it were, brainstorm as to how to address that 10%. And in brainstorming, we may come up with one of two or three things, meaning we may say, okay, a particular system or a particular method, a particular principle with just small tweaking or modification will be able to address those issues. Or we may say, okay, given the nature of the concern, no, this really calls for some sitting down and designing something specifically for that issue, that problem, that concern. Good example, for example, is in the area of, and this is not really financial management, but is in the area of, say, software development. There are a lot of off-the-market software that are used in various industries, and they can be used for most of those companies operating in those industries. But there are a lot of instances where companies will have their own software, and their whole computer network be designed specifically for what they are about, because there's no ready solution out there. Okay? So, just to quickly recap, as small business owners, sometimes we sense that something is wrong in the way we're financially managing our business, whether it be from an accounting point of view, from a tax planning and mitigating point of view. And we just get the feeling that, boy, this seems to be so overwhelming that it needs to be addressed in a non-conventional way. It doesn't work that way. Most of those concerns can be addressed by systems and structures that are ready in place for that exact same purpose. To the extent that we identify some specific things that are of concern to you that are not being addressed, and the established systems and processes are unable to address them, then that is when we're going to zero in and pay special attention to those things. And that is what management is in the general. So whether it be personnel management, financial management, tax management, that's what it's about. Okay? There's no need to try to reinvent the wheel for just about everything. The wheel is already there. See what provisions are there to address the concerns, and by doing that, you'll find that it's very easy to identify specifically those things, those components that are not adequately addressed by what is in existence. Then we can say, okay, then let's have a discussion to see what we need to create, what we need to modify to address those specific concerns. And I think one of the areas where this is so it is so prevalent and very interesting to know is in the whole area of tax planning. Yes, businesses are in operation, small businessman is in operation, and he's saying, boy, I want to identify all the different ways that I can properly plan for my taxes. Not trying to evade tax, just trying to ensure that we maximize what is due to us, that we get all our write-offs, that if there are credits available to you as a business person, that you get the benefit of all those things. And so all those things and more fall into the realm of tax planning. But do not think that your tax planning needs, right, are things that require a whole redesigning of tax planning systems. No. 90% of the system, 90% of your tax planning concerns already have systems that will adequately address them. So, for the service provider, for the professional, be it just a tax preparer, an accountant, a CPA, you name it. The intelligent approach is always going to be, let me see how much of your concerns can be adequately addressed by us applying what is already in existence as sound tax planning, as sound financial management, as sound business management. And once we take that approach, we're going to find that most, and I'm using the number 90%, you're going to find that up to 90% of your concerns will be addressed. 90% of the questions you ask, that you have, will be answered through those predetermined processes and structures. The other 10%, we will now sit and come up with something specifically to address that 10%. Okay? And that is a general plan. And so if you may be aware of the term management by exception, right? And generally speaking, it is exactly what it says. So in managing, you always want to try and identify the things that are the exceptions. Okay? So there's no need trying to rework everything. No. As the saying goes, if it's not broken, don't try to fix it. So in management by exceptions, what we try to do is to identify the things that are out of sync. The things that the existing financial management or business management status quo is not adequately addressing, then we will now develop, design systems and structures to deal with those particular things. Okay, so financial management by exception, tax planning by exception, general management by exception. Identify the things that currently has no clearly defined structure and system to address it, and then create, develop things to address those matters. Okay, by doing that, you will find that the efficiency level is through the roof, and you do not spend a lot of hours basically reinventing the wheel. So that is that. That's very important. So even for us, as we, because in the next couple of weeks, so to speak, 5-6 weeks, we'll be back in the tax season, time for tax season, and as usual, everyone, but small business operators at that time start to be running around and making sure that everything is in order and asking questions and ensuring that the provider that they go to is fully aware or conversant with all the provisions, etc. And yes, you should. And it is the responsibility of us as professionals to ensure that we are current with everything that is available for the benefit of our clients, to better manage you from a tax perspective, from a financial planning perspective, okay? But once you go there, then the responsibility is ours to help you to identify those things that need special attention. Those things that need special attention is where we're going to focus on spending most of our time, expertise, resources, so that at the end of the process, we have a comprehensive financial management package or a comprehensive tax planning and management package or whatever it is. Okay? So do not, as small business owners, I keep on saying small business owners, do not get overly concerned that and think that your issues, business issues, are such that wow, I don't know what I'm going to do because I don't know if there are any established solutions out there. Yes, there are. Yes, there are. And to the extent that some things are not quite there, we identify them and we address them and come up with the solution. Okay? So, good. And that's about it I want to sort of bring to your attention this afternoon. And this really came out of discussions I've been having with some of my clients who have expressed concerns, and I'm trying to, appease them and say, hey, no need to worry, man. There are systems in place, and if not, we can work on it. I'll be definitely bringing you up to speed on a few other matters as far as it relates to specifically to taxes and things. And one thing that I want to touch on in another session is this whole matter of tax rates. Tax rate. And just as a teaser, tax rate. You talk about tax bracket, tax rate, effective tax rate, marginal tax rate, all these things. And it's important, I'm not trying to get you to be a tax expert, but it's important for you to even have a basic understanding of how these things impact your tax returns, right? I'm just going to give you a teaser just now as to what is coming up. Now, when it comes to tax brackets, we talk about tax brackets. Basically, it is saying that the Fed government, the IRS, whatever, has established brackets. And what it is saying is that a bracket has a minimum point, a maximum point, representing salaries. It is saying, simple, if your income for the year falls anywhere between this low point and this high point, let's use some fictitious figures, this $10,000, which is the low point, and this $35,000 per year, which is the high point, if your salary falls anywhere in this range, then you are in a particular tax bracket. And so you have different ranges that have different tax rates related to the bracket. That's why we say we have a progressive tax system, so that as your income goes up in higher brackets, then your tax rate will move up. Now, note this. If you are, follow me carefully, if you are at the midpoint of a particular tax range, okay, minimum, maximum, and your salary happens to be right in the middle here, and I just say that this is a 15% tax bracket. You are at a 15% tax bracket, your actual income or salary is at the midpoint of that range. It definitely means that you can increase your income by working more hours or whatever for quite a while and still remain in the 15% tax bracket. Because if you're at the midpoint of the range, it means that your income can increase quite a bit without you coming out of the range, because you're just at the midpoint. So you still have a little ways to go before you reach to the maximum. So you can have several salary increases, or you can start to earn much more money and find that you have not moved out of the 15% tax bracket at all, because you were located at a point that allow you quite a bit of movement before you reach to the maximum of that bracket. Cool. Let's look at another thing. If, however, your current salary is just below the maximum of the bracket, follow me? If your salary is sitting just at that point beneath the maximum of the bracket, what does it mean? It means that any small salary increase, any raise of pay, any more income is going to tip you over the maximum point. So using some numbers again, the minimum is 10,000, The maximum is 35,000. That's the range. You are at 20. Now, if you're at 20,000 and the maximum point is 35,000, it means that you can move from 20 for an additional 15 to take you from 20 to the 35 and still remain in the 15% tax bracket. So you can move $15,000 income increase and not come out of a 15% tax bracket. But if you are at $34,000 salary, you're just $1,000 beneath the maximum of the bracket. So just $1,000 is all you can afford to earn as additional income and still remain in the 15%. So if you earn $2,000, it will take you from 34 to 36, which means that you now would have gone $1,000 over the maximum of the 15% bracket. And if the next bracket is an 18% bracket, what it means? It means that that additional 1,000 that put you over the maximum actually move you out of a 15% tax bracket into an 18% tax bracket. So when a person from year to year is having you're having your taxes done and you kind of get accustomed to the outcome and you're feeling good and everything is fine, and then suddenly you see that, oh, your tax is gone up. You say, what is happening? I mean, I didn't earn that much money, but you must recognize that you earned a sum of money, and because you were so close to the maximum point of the current tax bracket, that money may not be a whole lot of money, but it pushes you over into another tax bracket. Now, very important to know, it is not that your total income will be taxed at this higher 18%. No. And that is why I'm saying that at a later point we're going to be talking about marginal tax rate. It is saying that the income in excess of the 35,000 top end is what will jump over into the 18% tax bracket. So yes, most of the income will tax at the 15, but because you know of $1,000 that is over the 35,000 maximum point, that additional 1,000 is going to now jump into a different tax bracket. So the question sometimes begs itself, did it make sense for me to work harder to earn an additional $1,000 when that additional $1,000 is now going to jump up into a higher tax bracket? So at the end of the day, I may end up getting $200, $300 to take home out of that $1,000 if it doesn't worth it. Because that $1,000 earned within the bracket of 15% will end up putting more money in your pocket than the same $1,000 earned at a point where you are now in the 18% tax bracket. You see? So a lot of little nuances there. And I just sort of touch on that because even something like that is part of what we call your tax planning and your tax strategizing, etc. So I'm gonna leave with just this little piece. So if I'm at December, I'm using the same number of 10,000 minimum point, 35,000 maximum point. So if I'm at December and my salary is 34,000 and the maximum point is 35,000, then maybe it would serve me well to find a way of delaying earning that additional 1,000 until next year. Make sense? So what it means is that I will end this year at $34,000. So I will end the year remaining in the 15% tax bracket. And although I may have worked an additional $2,000, maybe I decide, okay, I will send in a bill for that $2,000 early next year so that that $2,000 become a part of next year's income. So I end this year at $34,000. The maximum point in this 15% tax bracket is 35. And below it, I'm good. I'm at 15%. If I had actually gotten that additional 2,000, it would have put me into 36,000 up into the 18%. I say, no, I'm not. So for example, if you're like a contractor or so, you may decide, yes, I did some work, but you know what? I'm going to delay sending in my invoice because I don't want them to pay me that $2,000 this year. I want to wait until January to get it so that it's not in the year 2022, it's in the year 2023. And by doing that, I remain in the 15% tax bracket for the whole of 2022, and the 2,000 that I get next year will just start the ball rolling for the new year. You see, so all of that is the timing of your income, the timing, and even on the expense side of it too, it applies. Some expenses you may want to say, let us quickly pay this bill before December 31st, because it is advantageous for us to be able to write it off as a 2022 expense. You may consider that, oh no, we have enough expense to write off for this year. So let us what? Let's delay paying this expense until January so that that expense can become a write-off against 2023 income, because we may expect that in 2023 our income is going to go up so much that we want to be able to get as much write-off as possible. Not difficult, but all these have to do with the tax planning, strategizing, and all it takes is some not even creativity. There's not creative, just a matter of knowing how the process works, how the tax table works, what is marginal tax, how it impacts you, what is your effective tax rate, etc., etc., etc. I said I was going to give you a teaser, but I think I give you much more than just a teaser. But next time around, we're going to be focusing on tax brackets, tax rates, marginal tax, effective tax, etc., etc., etc. So that you have an appreciation of exactly how they impact your tax returns, but more so your tax planning process. Okay, cool. So that's it from me for this afternoon. This is David of Etienne Business Solutions saying, remember now to check my YouTube channel, Etienne's Place. You're okay. Check it out, subscribe, share, like, tell your friends about it. You will find a whole host of videos there on several topics, varied topics. You see accounting, taxation, financial planning, you name it, we have it all there. You see, and when you visit, if you're so inclined and there's a particular subject matter or area that you would like for us to explore, just shoot me a link. I think just shoot me a link, send an email to Etienne Business Solutions, and we'll address it, because most of my presentation, if I call it that, or videos, are prompted by questions, queries, issues raised by clients, and I'm thinking to myself, well, if this client or if these two clients are thinking along that way, maybe it is something worthwhile sharing with the broader community, because others may have that same question or that same concern. All right, well, that's it for me, and be safe, because I understand that this weekend is going to be freezing cold. So be careful, be safe, especially with this crazy flu and that fancy name thing that is going around. I don't remember what it's about. It's really serious. So please be careful, be safe, and we'll be talking.